Fresh Economic Thinking podcast. New ideas and analysis with Dr. Cameron Murray and Jonathan Gadir.
G'day Cameron, how are you going?
Well, Jonathan, nice to be back.
Yeah, I just wanted to revisit something that still confuses me about something you wrote last year, actually. It was kind of a sort of a rant from you on your Substack, and it was headlined, "Taxes are taking half my income, and half my brain cells too." And you basically were complaining that people just have completely the wrong idea when it comes to how to calculate like the tax that's coming out of their pocket. And you said you started out by saying, "Oh, look at this tweet as an example," and then you went to town on how everything about this person's tweet was wrong. So please, let's go there. And I got to say, I didn't get it all. Like I didn't understand what it was that you were saying was wrong about what this
Okay.
person was saying. So let's go there and let's discuss it because you say it's very, very common.
It is very common, and I think the mistake is also very, what would I say, very useful for understanding macroeconomics. It sort of shows the difference between those that fully have digested the macroeconomy and those who can't think about the whole but can only think about little parts of the whole. So let me give you the main gist of it. So one of the memes that I shared there, it says, and I'm quoting here, "The biggest scam in life. You pay taxes on money you make, taxes on money you spend, taxes on things you own that you already paid taxes on with already taxed money." End quote. And that there is emblematic of this idea that, oh, look, I pay tax on my income, and then I pay tax on when I spend, and then the person I spend on, they pay tax, and if we add it all up, taxes are enormous. Now, that can't really be true because the total tax is only 30% of the economy, right? So how is it that people keep adding up these taxes, 30% on my income, 10% on what I spend, plus all this, and getting these bigger numbers? And the answer is that you are double counting the tax, but not double counting the payment or the production of value. Okay, because dollars circulate in the economy. If I pay you for legal services, Jono, right? I pay you, and there's a tax on that flow, right? When you go to the tax office, there'll be 30-something%. And then when you take your after-tax income and you pay someone to mow your lawn, right? Well, they'll pay 30% tax. Now, the question is, did that dollar you earned from me from legal services get taxed 30 cents on its way to you and another 30 cents on its way to the person mowing your yard? Or do we just count it once? And my argument here is we have to count it once because you're taking credit for your tax and the person mowing your yard's tax if you double count. And if we did that everywhere in the economy, right?
Yeah.
We'd add up all the taxes and get twice as many, because when the guy mowing the lawn does it for him, he goes, well, I got taxed 30% of my income, plus when I got legal services, I got taxed another 30%. So I'm paying 60%.
Oh, hang on though. I'm not the treasurer. I don't care about the flow. I just care about myself. Let me just read the tweet that you actually analyzed. Someone said in the tweet, "My employer pays me $100 gross. Before I get it, $32 is taken out for PAYG tax. That leaves me $68. We okay so far? I use that $68 to buy petrol for my car. Of that $68, $32.64 fuel excise and $6.80 GST is taken by the government." True? Yeah. That means out of the $100 I earned, I just paid $71.44 in taxes.
Yeah. So the problem with that is this. You paid, there were, I'm not going to say you paid them, because obviously the petrol company pays tax and they pay the fuel excise, right? Excise. It's not out of the $100 you earned. It's out of the $100 you earned plus the $68 worth of fuel provided. There were $71 of tax. Mm-hmm. So out of the $168 worth of things produced, right, there was $71 of tax, not 71 out of your only the 100. You've got to count the fuel, the $68 worth of that as well in the denominator.
Okay.
You can't just count incomes only.
But it would be right
that
to say
$68 is an income.
Yeah.
It is another person's income in the economy. It's the income of the petrol company.
Okay. So you're saying it's right to say they took $32 out of me from PAYG tax. That's true. But when you say, they took $32 fuel excise from me. No, they didn't take it from you.
From you. They took it from the petrol company business, right?
Okay.
For the $68 worth of income that they got, right? Because in this little scenario, there's not $100 of income. There's $168 of income. Okay. There's your income and their income. Mm-hmm. And this is the circular flow part of the macroeconomy. And so when people say, oh, we've already paid taxes on money we're already taxed with. No, that's wrong. That's just saying money flows round and round in the economy. Of course the dollar gets taxed and re-taxed because dollars circulate and they come out of payments. But do you know what else happens? New dollars that you would tax get put into the economy by the government so that you can pay more tax on that as they flow around. It's also not like a net withdrawal from the private economy because pretty much all of that tax, and in fact most of the time more than what was taxed, is actually spent back as new dollars given to someone to employ them. When you work for the government, that $100 you earned, guess what? It was tax. It was last year's tax and now it's your income. So how do you account for that? Okay, I earn $100. What do you mean? Your $100 was someone else's $100 of tax. Okay. You can't just claim that as your own. That's someone else's money. You see what I'm saying? And when you close that loop, that's the important part.
I do. So the next tweet is, it's always been like this. Probably this is a person that you quote from Twitter. It's always been like this. Probably as much as 80% of our income goes to the government coffers in tax. We should have a fantastic health system, police force, military, state-of-the-art infrastructure right throughout the country. And then someone replies to this person, oh, buddy, your example is the tip of the iceberg. Think about what your employer had to do to get that $100 to you. Your employer probably paid payroll tax for the privilege of employing. Then your salary was surcharged 11% by government for super.
Yeah, exactly. You see what they're trying to do? They're trying to add on flows of dollars that are connected to you. You're trying to. So you can imagine payments like the links in a chain, right? And you're one link. And so your tax from your income is one link. When you spend, that's the next link in the chain. And the taxes on spending are paid by the person you spend on. If it was not the case, then your income tax, you couldn't take credit for that either because that would be your employer's tax, right? So when we allocate who's paying tax, we have to also acknowledge that there's lots of people producing value that things are paid for in those links of the chain. And what these examples you've just described are, well, firstly, the first one's wrong because 80% of our income doesn't go to the government in tax. Australia is relatively low tax compared to its peer nations. And I think the total collective tax take is about 30% of GDP. It's usually between 27, 28%, but it was up a little because of the inflation, but it's going to come down a little because of the new stage 3 tax cuts. And I'd also disagree that we don't have a fantastic health system, police force. Don't know about the military. I'm not an expert. State-of-the-art infrastructure right throughout the country. I mean, it's pretty good. You don't have to travel too far around the world to see how good it is in many cases. I definitely think it should be better. I'm not going to complain that we shouldn't improve. I'm just being realistic. And so, yeah, what this person, and this is what I see every single day on X/Twitter, is people sort of taking credit for the work of others.
Mm.
That was my tax. No,
So,
no, you get to take credit for your link in the chain. The fact that you're connected to other links doesn't mean you get to take credit for it. Those other links can take credit for it.
okay.
Does that make sense?
Yes, it does now that you say it that way. Okay. So
Okay,
I think
great. It's
the
working.
problem is for me, if there is a problem, that
Hmm.
you're taking kind of an economist expert view on this, like being quite precise, and that's fine, but people don't always express their sentiments in a precise and legalistic way. What I think
That's
I
true.
would like to say as someone who's studied politics and sociology rather than economics is to say what they mean when they say this
Yeah,
is not they're not making a precise economics statement, which is wrong if they were. What they're saying is, I feel that too much of my income's being taken.
correct.
um,
That's true. So the valid point about taxes in Australia and too much of my income's being taken is that our marginal tax rates can be quite high for personal income from working. That was a very specific sentence because
yes.
your marginal tax rate, if you make capital gains, is half what it is when you work, right?
Right.
Because we have the capital gains taxes discount. And secondly, we have quite a steep rising marginal tax rate curve. So you get no tax on the first 18,000, then 27, 30, 37, 45%. So 45 is quite high. The other part of the income tax system where you should be complaining is that if you are phasing out of a welfare payment, if you have a parenting payment, a youth allowance, a pension, or whatever, and you go and get a job, you will find that you lose, for example, 60 cents of a payment for every extra dollar you earn, plus 25 cents in tax. So you're actually losing 85 cents out of the extra dollar you earn. So there's a lot of people, sort of working class people, who get payments for whatever their life situation is, and they go and they make another $10,000 or $20,000 in income by working another day of the week, getting a part-time job, and they only get a few thousand in their pocket because the marginal effective tax rate, what they lose from their benefit and what they pay in tax is a huge chunk. So that is a valid concern, but not adding up, oh, I lost 80 cents. I earned $1, but only got 20 cents extra because I lost 60 cents in my welfare payment and paid 20 cents tax. Oh, plus I spent that last bit on petrol, therefore I get to add that tax. Plus the petrol company employed someone and that person paid income
So they're
tax.
kind of
I've got to stop
misdirecting.
counting at that point.
Yeah,
I've got to
they're
stop counting.
misdirecting themselves there. Yeah.
Yeah.
So, well, since you've mentioned the effective marginal tax rate, and I wasn't going to go here, but we may as well.
Mhm.
Fairly recently realized what a mistake I had made, given the incredible stupidity of our tax system. Mistake I'd made not earlier in life taking out private health insurance. And the reason I say that is because I resisted that on principle. Like I said to myself,
Mhm.
I do not want to pay a private company something for a product I do not need. I do not want the government forcing me
Mhm.
to buy a product I do not need, like from an industry that shouldn't exist. Um, I'll just pay the Medicare surcharge every year on my tax. And now I see, okay, it's getting really, really, it really doesn't make financial sense for me to continue to make that choice. They're really financially incentivizing me very clearly that you should be just taking out the cheapest possible. I think it's 750 excess or something. Um, just the
Yeah.
cheapest possible private health insurance. It doesn't give you anything. It's like, oh, if you have an accident, you'll get an ambulance. Great. Take that out and you won't pay Medicare charge on your tax.
The
Okay, so
surcharge.
I finally did it, and I realized that's not even the beginning of how perverse our system is. What they've done is they've said, oh, we're going to charge you more now for this. There's a levy on your private health insurance now that you've taken it up because you're going to pay a levy for every year after 31 years of age that you didn't take out private health insurance. We're sticking a levy on that, and the older you are, the higher it is. So because we're punishing you for not obeying our instruction to buy
Yeah.
private health insurance earlier. Now,
Mhm.
to me, it's perverse. I mean, the whole idea of forcing through the tax system people to buy the product from an industry that shouldn't exist and doesn't need to exist. Number one, that's perverse, but also the idea of, oh, well, you didn't do it soon enough, so now we're charging you for your past misdeeds. And what was the misdeed? Not
Yeah.
purchasing private health insurance? What the hell is going on?
And this is the weird thing, right? Because people in their 20s generally have much lower incomes, right? So it's not, and quite often don't have children. And so what's the benefit of them to purchasing private health insurance? This is why they're all not doing it, right? But yeah, you're right. So this is a classic problem of trying to squeeze a lot of other things sneak them in via the tax system, right? And yeah, that's why the tax code gets complicated. We just try and sneak in something to do with health insurance into this levy. I love how we have all these names: levy, surcharge, tax credit, tax. I mean, what are they? They're all just taxes, right?
Do you know who introduced that thing of, oh, we're going to charge you a levy on top of your private health insurance because you didn't take it out before you were 31? And we're going to charge. Who introduced that thing of charging you more for your private health insurance? Now you've done what we've asked you to. We're going to punish you for not doing it soon enough. Like, who came up with that?
I think it was a Howard years
Okay.
one. I'm just quickly Googling now for you.
Yeah, we can cut the Googling out, yeah, because we'll make you look smart. Yeah.
No, I'm gonna have to check. I also have avoided this. If my dad's listening, he's made me chase it up. But I guess it's another perverse incentive in the tax system, is because my understanding is that Medicare levy surcharge is levied on your individual income, right? But the health insurance is a household health insurance. And so what you want to do is have two household incomes below the Medicare levy surcharge to avoid it, but maximize the household income.
Right.
That's,
there you go. If you're in that position, you can.
Yeah. That's where the perverse incentive is. So there's definitely lots of valid complaints about the tax system. And and while we're on the tax system, I think another common view that came up recently. So I've explained this double counting issue with taxes, right? But another issue that I didn't realize was common is that probably not the audience of Fresh Economic Thinking, but in the general public, people don't differentiate marginal tax rates from your average tax. So they miss that, yeah, you might pay 45 cents in the dollar on the next dollar, but on your first $100,000, you didn't pay 45 cents. In fact, you paid 0 on the first 18, 20 on the next, whatever it is, 25, and 30 on the next bit. And yet a lot of people, when you survey the general public, think that their marginal tax rate is their average tax.
Right.
And I think that's just another one of those misunderstandings that's out there. And I think if you held both the views, one, that you can take credit for the tax paid of the petrol station where you spend your money, or the person you pay to fix your car, and you think that the marginal tax rate you pay in your income is the average tax rate that you and everyone's paying, then it's quite easy to think, oh, 80% of our income is in taxes. The government is the economy.
Okay.
This is, there's sort of two errors combined to get you this unrealistic view that you've got, the government being 2.5 times bigger than what it is, all three levels combined. So look, these issues are subtle at times, right? They're subtle issues, but I think it's important to talk about them regularly.
I certainly feel very negative towards the state when the state makes what I consider to be immoral decisions when it comes to. I mean, there's something about tax, right? It's such a personal thing, and it affects your quality of life. And when something like we're going to force you to buy this thing, and we're going to penalize you to not buy this thing, that sort of undermines people's sense of legitimacy of the political system.
Yeah, I think I know where you're going. So my view on that is, I do like having public roads and public hospitals, and rather than and you know, tax is part of that. And yeah, when I end up, you know, sending money to the tax office, I do feel like, gee, that was a lot of money just disappearing, right? Normally you spend that much money and there's a new bike in the driveway or a car or something, right?
Yep.
So it sort of disappears, and you get it back in dribs and drabs through your public services. But it's, you know, I'm not forced to use the public hospital. I'm not forced to use the public school. But if it's good value, I do it, right?
Mm-hmm.
So I'm very much of this: get the public service to do good things, and people will use it. Don't force people into certain decisions.
Mm-hmm.
So I'm very much along that line. And so private health, subsidizing that through the tax system, I think is a mistake. If private health insurers can offer something better than the public insurance system we have, then great. People should be able to do that. I don't want to prohibit that, but I don't want to essentially subsidize it through the tax system when we already have our own public health system that we should subsidize and build up capacity and improve over time.
Okay. And to wrap up on this tax episode, I wanted to invite you to comment on superannuation and tax.
Oh,
I know we're gonna do super probably next week, next couple of weeks. Just again, but on the tax side of things.
Yeah, super. I mean, the way I see super these days is super is nothing more than a tax break. Like if there weren't tax breaks, it would be a compulsory asset purchase scheme. And people go, well, what good is that? I can purchase these assets with my after-tax dollars. Why would I support this scheme? It's the tax break, I think, that is the secret sauce. And there's actually a bit of a trick. What ends up happening is because super contributions rise in proportion to your income, and in fact more than proportionally, because voluntary payments happen higher up the income ladder, the tax breaks are also higher up the income ladder, which I think is a bit perverse, right? That we've got a system designed to help people in retirement, but what it's doing is giving more tax breaks to those who pay the most tax to support the public retirement system of the age pension. So it's pretty bizarre. I think in terms of people's complaints about tax, because it's so hidden, you don't hear too much. People like that it's a tax break. And I'm sort of surprised that people haven't said, well, super is just the same as a tax, right? It's just like taxing me for old age insurance.
Exactly.
We could call this a social insurance levy or a social insurance tax, which many countries do, but because it's not called a tax, we think about it completely differently. And of course, it's now 11% of everybody's income. So this is just another one of those things. And interestingly, in all those tweets that I shared, no one talked about super being a compulsory non-tax payment because it's invisible. It's those other things like taxes on beer and alcohol and fuel and your income that is very visible and high at the margin on your income. And super's this magic thing. So maybe we should hide taxes more, right? Maybe that's a thing.
Yeah.
I don't know.
Yeah. All right. Very good. Thank you, Cameron. We'll catch up next week and hopefully talk more about super.
Great to talk. See you, mate.